Hello traders and welcome to another video review. Today is Friday, June 20th, 2025. Let's take a look at the economic calendar for today. So what do we have overnight? During the overnight Asian session, we got data from the Japan. National core CPI, national CPI and monetary policy meeting minutes were released overnight. As you can see, core CPI up from 3.5 to 3.7, beats the expectations of 3.6%. People Bank of China loan primate was set at the same level of 3%, just as expected. Data from the UK in form of the retail sales and core retail sales are showing big deterioration, big slump from 5.2% to minus 1.3%, from 1.4% to minus 2.8%. Very bad bunch of data from the UK. German PPI down a little bit less than expected, from minus 0.6 to minus 0.2%. At 10 o'clock we got the ECB economic bulletin scheduled for release, and at noon we got the Eurogroup meeting that will start again. During the US session, we got the data release from the US. Philadelphia Fed Manufacturing Index is scheduled for release at 2:30. This is the major event of the day, together with the Philly Fed employment data from the Canada, core retail sales, new housing price index, MMPI and retail sales. All of them are scheduled for release at 2:30 as well. At the end of the day, we got the US Barker Hughes only recount and total recount. This data are scheduled for release at 7 o'clock, and at 10:30 we got Fed's balance sheet scheduled for release as well. So the quite busy Asian session, quite busy London session, and busy US session. So Friday as usual, business as usual. Let's start with the technical part of our analysis, and we are going to take a look at the euro dollar first. For our chart of the euro dollar is showing us a pullback from the lows of 1.1448, just above the 100 periods moving average, back up towards the intraday technical resistance located at, this is the resistance here, located at 1.1544. So right now we are locked inside of this very interesting but narrow zone between the yesterday's swings low and the technical resistance. As you can see, momentum jumps towards the level of 53 points. However, that's not good enough for the bulls to break above the wave 5 high at 1.1632. We are still under the local trend line. Let me just point it out for you guys. This is the local trend line. Let me just make it like a black or something. There you go. So the local trend line, the black trend line, is still acting as the border that prevents bulls from rallying higher. So we got the short-term black trend line. Obviously, we are still above the orange trend line, which is quite interesting here to watch, and on the breakout below 100 pips moving average, and then orange trend line might be more bearish than it is right now. For now, we are witnessing a development of a complex and time consuming kind of a pullback, kind of a corrective cycle. So right now, no sudden moves from the euro dollar. Cable, after the data that were published earlier, the cable moved lower. Momentum went towards the level of 50, broke it a little bit to 52 points, and now we are back towards the level of 50 as the market is making some sort of the bearish engulfing pattern, which is still located below the technical resistance at 1.3515. We have marked this level with our blue arrow, just in line with the 100 periods moving average. So this is the major technical resistance for the bulls. Only a breakout above this technical resistance might give us some sort of the momentum towards the supply zone above. Let me just, where is my rectangle? There you go. I'm gonna make the this supply zone visible for you guys, so we know what we are talking about. There you go. So this is the rectangle I'm talking about. This is the zone I'm talking about. Supply zone. Supply zone is located here. So we need to break above the supply zone in order to continue the up move. However, with this kind of a momentum, there is no chance to do it. All right, and after this data that were published, it looks like the market is under the bears are back with the control of the market. If we place this Fibonacci retracement, tool, but we will do it the other way around. So we will do it like this. So we can see that the market retraced apparently from, let's say, from this high to this low. Okay, from this low to this high, we retrace almost 50%, right? If we grab this level here and place it here, it will be like a 50%. So we had a downswing, then we have the 50% retracement. Now its market is ready to move even lower. So the bearish outlook for the cable. Because of the Japanese data, let's take a look at the US dollar versus the Japanese yen, and we got a slight breakout above 145.48 with the local high at 145.78, but then we just go back straight on below this technical resistance. The level of 146.29 is still intact, and the supply zone is still intact. So the market of the US dollar versus the Japanese yen continues to move sideways. As you can see, not much is going on here. Momentum is still positive. It's not that strong, but it's positive. It's good enough to do this kind of a slow and steady movement to the upside. However, there is no sign of any aggressive dynamic movement to the upside that could break, for example, some sort of the technical resistance levels. On the other hand, there is no sign of a bearish pressure as well. So the market is slowly drifting above the demand zone. As you can see, I just managed to move it a little bit so you guys can see it. So the market is drifting a little bit. Not much is going on here. We are waiting for a breakout, because without the breakout, both directions are good enough. Right now, breakout above the supply zone, breakout below the demand zone. We are waiting for the decision of this market right now. Trendless market. I mean, the trendless market means that the market is doing the range trading, obviously. What is going on the let me just take a look at the gold market. We got a breakout to the downside, right? On the 4-hour time frame chart, we broke below the 100 periods moving average at 3,356, local low 3,339. It's not big breakout. However, it looks like the market wants to go lower, because the RSI is still pointing to the downside. There is still some room to the downside as well on the RSI, on the momentum indicator. There is plenty of room to the downside here, down towards the $3,293. It might be some nice pullback. It might be some nice movement to the downside. However, please notice that the short-term trend might be a little bit down, right? But generally, the long-term trend and mid-term trend on gold is obviously up. Let's take a look how big is that movement to the downside. So let me just remove this level so we can clearly see what is going on here. And we need some measurements. So let me just take my price range tool. So from the highs of 3,449 towards the recent low, we got minus 2.88. All right, but the other movements to the downside. So we got this one going down towards this one, and this is minus 3.23. And there is one more. So even if we apply this measurement to this one, we got minus 3.58. So minus 2.88. Oh, it's a mistake. Let me just make it a little bit. There you go. Minus 3.21 is roughly in line with the previous minus 3.23 and minus 3.58. So this is typical normal correction. So that's why we cannot say that the gold is in the downtrend in the short term yet. Okay, just a typical correction for the gold. Bitcoin, and the Bitcoin is not getting any attention recently, as right now we are testing the yesterday's high 105 and 5,399. We are below 100 periods moving average. We are below the short-term technical resistance 106,147. So momentum is trying to break above the level of 50, but generally the volatility is very low. The market doesn't actually move that much. So we are looking for a breakout again on Bitcoin as well. Not much is going on. There is no point of analyzing this market, as it's been moving sideways. It's been moving in range between the demand and the supply zone for at least, well, it's a 1 month. This is the 22nd of the May. This is 20th of the June. So almost 1 month. We got the sideways trend on the Bitcoin. It doesn't mean it's a bad thing. It's just some kind of a clue that maybe some kind of a partial distribution is taking place. However, the dips are being bought, as you can see, right on. So the bulls are preventing this market to come lower, below the $100,000 right now. So we should see some sort of the improvement of the sentiment, and we should see the further attempts to break above the supply zone towards the new all-time high on Bitcoin soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.